How do you do, ladies and gentlemen? Welcome to today's session. I'm your host, Seth Julian, welcoming you to today's live trading event where we're going to talk about the crude oil inventory report. May I please ask that you let me know in the question area whether you can see the opening screen and hear my voice. I've had some trouble with my control panel and it doesn't show me the audience view. So I need to confirm from you that you see the economic calendar in front of you and that we're ready to roll. And of course, that you can hear my voice as well. That would also be helpful. Come now, ladies and gentlemen. I see you're out there. I just do need a response. That is at all possible. Ladies and gentlemen, anybody? Some form of confirmation that we're online for fun here. That would be helpful. That would be helpful. Can see and hear fine, says Hannes. Welcome, sir. You're always a pleasure to have in the room, and well, and helpful in this case as well too. All right, ladies and gentlemen, that's going to do it for fire. I see Barbara's here, and Sandy, and Alana. Oh, great, there's plenty of people here. Plenty of people. All right, let us get underway. Today's crude oil inventory report expects, well, first of all, let's talk about what the crude oil inventory report is. And that's easily done by clicking on it in the investing.com or in Forex Factory. And oh yes, I'm getting carried away here. I neglected, of course, as usual, to introduce myself. My name is Seth Julian. I'm 66 years old. I've been trading in the capital markets for decades upon decades. I have advanced degrees in trading, finance, and economics, and am the chief global capital markets analyst here at Bank So Trading. And I've been trading this live event for many, many years, and it's a lot of fun. Hello, Lorraine. Good to see you too. And well, let's just get underway. Oh yes, I am a little discombobulated. I guess I've been drinking a little too much coffee. We'll stick to the soda water. There's only one protocol in the room, ladies and gentlemen, and that is that you please ask your questions in real time so that we can contribute as much as we can to the dialogue effect as opposed to the monologue effect. So please ask questions. Feel free. We never disparage or derogate anybody who asks a question. We consider it a commitment to the process, so don't be inhibited in any way. The only dumb questions are the ones that aren't asked. The Energy Information Administration, EIA, administration's crude oil inventories measure the weekly change in the number of barrels of commercial crude oil held by U.S. firms. Commercial crude oil, also referred to as above ground crude oil. This level inventory influences the price of petroleum products, which can have an impact on inflation, among other things. An increase, and this is obvious, if an increase in crude inventories is more than expected, it implies weaker demand and a bearish price for crude. Same can be said if a decline in inventories is less than expected, then that means that crude prices are likely to fall. If the increase in crude is less than expected, it implies greater demand and is bullish. And the same can be said if the decline in inventories is more. So this is a histogram of what's happened in the near past. Inventory has been positive. It hasn't really shrunk. That indicates, in general, either it could indicate a slowing demand, which is unlikely. More likely, it indicates a rising supply, because the demand for oil is largely static. The U.S. consumes a little over 10 million barrels a day. The world produces and consumes about a little over 100 million barrels a day, and this is pretty fixed. It has been certainly since the recovery from the pandemic, when transportation ground to a halt. But transportation does not usually grind to a halt. In fact, it's a fairly inelastic demand function, fancy economic term, meaning that the demand is constant. And so therefore, one of the the principal effect on prices is supply. Hence the crude oil inventory report. And just for the record, why it says commercial oil, or I like to refer to it as above ground, I just want to show you this picture. If I can make it bigger. These are the salt caverns on the Gulf Coast, where the U.S. Strategic Petroleum Reserve (SPR) sits. They pump it in from pipes, and they pour it into these underground, formerly salt caverns. They're impenetrable, and and they hold the oil, and they've got about 1 billion barrels down there. Unless you think that that's a real load, here's a bigger picture of where those places. This one they're on the Gulf Coast. Not surprisingly, because that's where U.S. oil delivers. Much oil is taken out of the Gulf of Mexico, and of course, Houston is the oil capital of the world. Galveston being its port, and well, you get the idea. This is a load of crude down here. Now. That's why we refer specifically to crude above ground. And now we're going to take a look at where that above ground is. I usually set this up, but I haven't had a chance today. We'll go to Cushing, Oklahoma, right there. And no, I'm sorry. Why didn't we go to Cushing, Oklahoma? There we go. Can we go to Cushing, Oklahoma, please? I don't know what it's doing now. Well, we're not going to do that now. Cushing, Oklahoma is where the oil delivers. And as a result, Cushing, Oklahoma, and therefore Cushing, Oklahoma is a tiny little town in the middle of Oklahoma, about 6,000 residents, and about 8 billion barrels of oil. It's just filled with oil, above ground oil storage facilities. And it looks like exactly what it is. An oil port, an inland oil port. Anyway, the idea is like this. If the inventory comes out greater than, let's call it 1 million, let's say instead of 900,000 barrels, it comes out 1 million barrels, 1,010,000. That is likely to drive price down, and it'll imprint in red. And we'll see that immediately on the minute chart. And if this isn't a minute, this is the oil price chart on MT5. Let's bring this down to a minute chart. You see that oil has been steadily rising now for some time. Let's get a more. This chart shows us crude oil, going back to the peak of January 22, where this is the lead up to the. This is the pandemic, of course. Here, no, I'm sorry. This is this is the lead up to, this is the breakout of war in Ukraine. It peaks again, and now it's been a steady decline since January 22, 2 years. It's on a slow rise here. Let me make this. Oh, it is already, and we expect it to continue for the simple reason. Well, there are several reasons. One is that OPEC itself has further reduced supply. And this is in a direct attempt to manipulate the price upward, and they can do that. And when I say OPEC, we've got to keep in mind that OPEC is a complex organization. It's got many members, 30, 32 members, plus, in the plus, OPEC plus refers to Russia, of course. And they don't. This is a tough crowd to herd around. They don't march in harness very well. They're very undisciplined and disorderly. And so Saudi Arabia plays the role defined as swing producer. And this means that when there is excess supply, they will cut down their own supply to reduce the excess. And when there is a shortage, they will increase their supply excuse me, to the market and make up the difference, hence the swing producer. And I can tell you they're very reliable. So reliable, in fact, that the war that has broken out in the Middle East as of about, I don't know, I guess it must be 5, 6, I don't know, 6 months now, they have not curtailed supply in an effort to retaliate or punish or in any way affect world economics. Not like the last major war in the Middle East, where they cut off supply and sent the Western economies into a nearly 10-year recession. The Saudis are lined up this time, and so prices are remaining stable, but moving up slowly and gently. That's the optimum kind of price manipulation that the cartel likes to enforce. Keep in mind, cartels are illegal. Cartels are illegal to operate in most countries because they're market restricting. They limit competition. But because oil is so important and OPEC is so huge, they get away with it. But and so it's just a fact of our economic life that we tolerate and deal nearly exclusively with the oil producing, the Organization of Petroleum Exporting Countries, OPEC. Interesting, and I suggest you do a little homework studying up about OPEC. Let's take a look at the report. With T-minus 21 minutes and counting, and if there's anything else to be gleaned from this, no, there really isn't. What we see is in the last since January, there has been an increase. Oil inventories have grown. This does indicate a trend of more inventory and falling prices. Yet, when we look at the chart, we see that prices are rising. So, again, what's the giveaway there? The supply. The inventory is increasing, yet price is rising. So that means inventory is increasing on the base of lower supply. Hence, price rising. Let's open the floor to some questions, ladies and gentlemen. Muhammad asks, the ANC is a cartel. They control our pensions. Well, Muhammad, that's a bit of a political statement, and I respect it. I don't like to comment politically on the air, but the ANC is more than a cartel. The ANC is an all-powerful monopoly of many things. Many things. They control pensions, among other things. But yes, you are right. You're right, sir. And elections are coming up, so a change may be in the offing. Hard to know, but it's possible. While the ANC has traditionally, since Mandela's liberation, been the ruling party, well, I don't have to tell you people, what's going on in politics in South Africa. Suffice it to say that it's time for change, and that's patently obvious to everybody except the ANC, of course. But that's what happens when you become ensconced permanently in power. Absolute power corrupts, and absolute power corrupts absolutely, as the saying goes. Barbara asks, why does not OPEC more? I see your question. Why doesn't OPEC cut back supply more? That's your question, correct, Barbara? Why doesn't OPEC cut back production more than it already has? OPEC is a savvy organization. OPEC is essentially Saudi Arabian government and Saudi Aramco. That's enough said. These are deliberative, aware, highly worldly organizations that don't like to rock the boat. This is big business for them. This is the only business for them at this point, although they're making a tremendous rush to diversify into other things. But it's delicate, and it has to be handled diplomatically. And you don't want to rock the apple cart by, suddenly turning off the spigots like they did in '73. This cost them, by the way, more or less irreparable damage, because with that move came the beginning of very, very serious efforts to make crude oil consumption more efficient, to engineer transportation vehicles, the automobile, the autos and trucks, the marine vessels and aircraft much, much more efficiently to reduce the demand for crude oil in their usage. And it led to an overall net decline in demand. Even when you average in the overall growth in GDP since then to now, the demand per unit of GDP, if you understand what I'm saying, in other words, how much oil does it take for each unit of GDP, has shrunk. It takes less oil to produce that unit of GDP, whether it's $1 billion or however you measure it, than it did 40 years ago, 50 years ago, I should say. That's when the last major OPEC crunch took place. Marius asks, we will only trade on oil, or can we look at some other currencies that will be impacted by the oil? No, Marius, you can't. Well, you can. You can do anything you like, but no, oil is the only thing affected by this trade, generally speaking. I'm 19 years old, and I want to know why are trucks not going electric? I'll tell you why. The answer is simple, Muhammad, because battery technology is not sufficient to power a freight carrying vehicle. All of the green revolution and all of the talk you hear about going, getting rid of hydrocarbons and what have you is adorable and cute, but basically nonsensical. If you think that you can power freight delivery on solar power or wind power, you don't know what you're talking about. There's just so much energy packed in a cup of diesel fuel, and these engines are so, and the engineering, the mechanics of these vehicles are so efficient that compared to batteries, you'd have to have the whole freight carrying area of the truck filled with batteries just to propel it long enough to carry some freight. We're not there yet. Once battery technology is sufficiently advanced so that it can be as dense in energy richness as liquid fuel, then we're talking about something else. But automobiles, yeah, we have electric automobiles. They're adequate, but not for hauling freight. What is GDP? Asked Muhammad. Gross domestic product. It's the sum of all goods and services sold in an economy. It's the standard measure of an economy's worth, sir. The GDP is how much does the economy produce every year. If I had to buy everything that everybody else buys in an economy, how much would it cost me? The gross domestic product of the United States is approximately 20, I think it's now $25 trillion a year. That's the price if you want to buy the whole operation. Is electric a scam due to it be powered by fuel? Wow, Muhammad, you're filled with all sorts of questions today. I'm always appreciative of a discussive group, and I like that. It's not a scam, but it's overhyped. Now, does that make it a scam? I don't know what a scam really is. Scam is a dishonest, fraudulent undertaking. So no, it's not a dishonest, fraudulent undertaking. Is there a lot of bullshit? Oh yeah, it's filled with bullshit. In fact, so much so there's even a term for it called greenwashing, meaning we pretend to be green, we pretend to have a lower carbon footprint, but we don't. Nobody's measuring it. It's like these environmental activists that fly off to conventions about how to save the planet in planes. So they go and they sit and they talk about the environment. Meanwhile, for every passenger mile they flew, they dumped 2,000 tons of CO2 into the environment. Are they scams? I wouldn't call them scams, but there's a lot of hypocrisy and bullshit in that. You see my point? Look, it's time we all recognize what is the GDP of South Africa compared to the UK. I don't know, Muhammad. I would say probably a tenth, maybe less, maybe an eighth, a sixth. But I mean, you could find out. I don't have time to do it now, but it's easy if you go into TradingView or just ask Google. It's not that complicated to find GDP statistics. Oh yes. So the green revolution. Look, it's clear that we must stop burning shit to progress as a socioeconomic society. And we've been burning to progress for tens of thousands of years. Every knife, every blade, every motor, every engine, everything that's molded, twisted, welded, formed, bent, bashed, uses heat. Just ask the German economy how much they depend on cheap gas to make for their automobile industry. It takes a lot of energy to do that, and the less we burn, the better off we are. And we're moving to a non-combustion society. Electric vehicles are the first step, but our major holdback bottleneck at this point is battery power. Until we have enough battery efficiency to store the power we generate from the wind and the sun, we won't be able to supply our basic needs, what are referred to commonly as base loads. Those base loads are currently met with fuel burning power plants. The marginal difference, marginal versus the base, that extra bit is supplied by alternative fuel, and it's growing, the proportion is growing, but it's just not significant because we don't have the ability to store the stuff. Once we can store batteries in a way that's efficient and not harming to the environment, keep in mind lithium, current battery material leader, is an ecological disaster. It's nearly impossible to dispose of. It's a very heavy metal. It's very environmentally damaging to mine, as are many metals, as you're probably aware. As South Africa, you know that the cyanide is used to leach gold out of the ore. And so you can see that it's not there yet. It's not there yet. But is it a scam? I wouldn't say. I wouldn't say it's a scam. But it's, those people who drive around electric cars feeling good about themselves are full of shit, frankly, because where does that power come from? Is that power coming from wind? Is there power coming from wave energy? No, it's coming from burning hydrocarbons, not in their little engine compartment, in a giant power plant located far away from their little plug. But that is a chimera, I would say, a delusion, a self-delusion. I'm driving an electric car so I pollute less. Not really, but it's a start, and I don't want to denigrate that start. It's worthy and it's important, and we need to continue with it. But my only caveat is let's not pretend we're saving the world with this. Okay, it's going to take a lot more than driving a Prius to save our asses from the impending climate disaster that we have contributed to bringing on ourselves, though I'm, again, not convinced that it's entirely our fault. I'm of the opinion, it's my opinion, I could be wrong, as I often am when it comes to my opinion. There are other forces at work here. There are much, much larger trends taking place. The climate is not something, we've only been around for a fraction of time ourselves, so to say that in our short time we've brought about what's taking place, the climate, it's simply wrong. There have been these cycles, temperature cycles in the climate for millions and millions and millions of years. Are we contributing? Yeah, sure we are. I don't deny that. I don't pretend to deny it. I don't pretend that we haven't had an effect. The question is, what's the impact, the total impact? Not converse, I would say, along with that, let us not pretend that we also are the saviors. You hear this nonsense? Well, we'll solve the problem. We'll put up, we'll pump the carbon from the fuel plants underground. Yeah, maybe. I don't see that. The real solution is nuclear power, but that's got its own political difficulties as well. Wow, Mohammed, a lot of questions today. This is terrific. I'm very glad to see this. Let's take a look at what's coming over the wire. US 30 is up, plus $124. What is that? US 30 is the Dow Jones, sir. That's the Dow Jones Industrial Average. It's a weighted index of the 30 most powerful, 30 most influential, heavily largest market cap stocks in the United States, and they have those stocks have an outsized impact on economics in the United States. Jocko asks a quick recap on what to do, please. Green buy, red sell. No. Can you trade US dollar CAD based on crude oil inventories? No, you cannot PNR because this is strictly US inventories. All right, we're down to 5 minutes and counting. I see the 5 minutes and counting for the report. No, because these are inventories of US inventories. Canada's inventories are different, though, in fact, I would even go this far as to say much of Canada's output is in the U.S. inventory system because they pump it through above ground pipelines as well as rail to the U.S. storage. So it's in there, but the Canadian loonie is not going to be, to my knowledge, I've ever seen any correlation between the U.S. crude oil inventory report and the loonie. Now, to go back to Jocko's question, a quick recap on what to do. I said no to your question. We don't say buy green, sell black. That is not the procedure. Let's say, and just let me run through got T-minus 5 minutes. Let me run through the possible scenarios. One, of course, is that it prints at 900,000 barrels. It'll print out in black. It will not indicate, it will indicate no trade. Indicate, I say. Because we don't follow in a knee-jerk reactive way the outcome of the report. What we follow is the market reaction to that report. And as you can see, there's a lot of nervous activity taking place right before the report, and we don't follow that because these guys are always wrong. These are the people trying to outguess or second guess or outsmart the market. We don't follow them because they're always wrong. Nobody's going to, we wait for the report outcome. So let's say the inventories are much larger than 900,000. Let's say it comes out 1.5 million, 2 million. That's likely to have a depressing price on oil. However, likely schmeikely, we wait to see how the market reacts. That's the key to what we do, Jocko. I hope I've answered your question. It's the market reaction we trade, not the textbook knee-jerk what we think we should do reaction. And let me make you aware of some risks that are present in this. The first risk is the report comes out in a definitive way, significantly above, significantly below, and the market reacts inversely to the premise of our position. So let's say oil inventories decline significantly. Let's say there's only 300,000 barrels in inventory. That you would think should have an escalating effect on price. If the price doesn't escalate, what are you going to do? You're going to trade it the opposite way for some reason, for a reason you don't understand. I don't do that. I don't have that kind of stomach. I have hard enough time making money in the markets when I think I do understand. When I know I don't understand, I don't even try because seems to me to be a fool's mission. Though I know people who have the nerve to do it, and I respect them. Just because you can't go by what I do. You have to do what you can do, what your risk appetite is, what your sensibility about how to engage with the markets is. This is a highly personal, highly subjective affair. And as I've mentioned to many people I've spoken to over the years, and the opportunities are abundant in the capital markets, in crude oil and cotton, you name it. There's opportunities everywhere. And in our particular period now, fantastic opportunities. We're all-time highs. This economy is robust and going gangbusters. But it depends on your attitude to it. It's not the opportunities. It's controlling yourself once you're in a trade, limiting your loss, limiting your profit, getting in and getting out at safe, reasonable prices relative to your account size and what have you. These are what really determine success of trading. Mohammed again asks, do my pension get invested in these type of things? It's certainly invested in the S&P 500. That goes without saying. It's in your pension fund is invested in assets that return a good return because that's how they pay your pension. You put in a little bit, everybody else puts in a little bit, and then when you go to retire, there's more than you put in to take out. How do you think that magic occurs? It occurs by virtue of the fact that they're vested in profit-producing assets. So I hope I answered your question, Muhammad. All right, with T-minus 1 minute and counting, we're expecting 900,000 barrels. Anything significantly more likely to depress price. Anything significantly less likely to raise prices. But again, live trading event, we don't really care. We don't need to project. We don't need to predict. We don't need to have our own opinion. We just sit and wait, watch the market reaction, and act accordingly. Let's just make one final move. Make sure we're logged in. Always want to log in on the trading platform. Make sure we're ready to trade. T-minus 1 minute and counting. Okay, we're all set up, ready to go. I want to go to my favorites, make sure oil is right there on the screen, ready to go. Okay, all fun and games, ready to roll. And again, this minute often drags on. My system clock indicates 3 seconds, 2, 1, 0. But again, my system, there's all sorts of latency and all sorts of things. Here we go. It's a minus one, it's a decline of 1.5 million. So it's about 700,000 less than was expected. Let's take a look at what oil's doing. That should drive the price up, and it is. That's a nice decline. Let's see. I think I'm going to go along the oil. I'm going to buy oil. I'm going to take 2 lots, buy 2 lots, invest. Hope I get fill. Order is processing. I got a nice fill. The system is running nicely. That's always a good thing to see. And here we go. Oil is moving up. And oil up. And oil is moving up. Yes, indeed. Oil is moving up. And so far, so good. How about the rest of you people? Did you get in? Wow, minus 1.5 million. That means that they expected a million inventory. It declined by 1.5 million. That's, by the way, that's a decline of 2.5 million barrels, nearly 2.4 million to be exact. And it's having a nothing effect on price so far. I mean, it took a jump. Let's see how my trade's doing. I'm down. I took a big load. I took two lots, but I've got some faith that this is going to come back. So let's keep watching on real time. Yeah, it looks good. Yeah, oil is definitely moving up, ladies and gentlemen, moving up, and we expect it could very well get to 79.90 to 80, 79. Excuse me, 79.60, 79.70. That's where it could go in the near term. Let's take a better look, I should say. And we'll go also down to a 1 minute chart. So it took up. It's battling to go up. It is battling to rise. Volume is above average, and by the way, most of the volume is onto the short side. But that's and here it's showing having a hard time moving it up. Let's make sure we're on the same screen. It's trying hard, but falling back. I don't know why I took such a big position. May have been a mistake, but let's let it breathe. Let's let it breathe because the trend is up. The indicator is in line with the trend. It's not very likely that the market is going to go against the trend, nor the indicated direction by the in the report. So let's take a look. Let's see what else is coming across the wires here. Muhammad asks, does my pension get no? Why is the return on investment only 8,000 to every 1 million rand I have? I don't understand that question, sir. I can't answer it. Asking my father, he says. Okay, well, go right ahead. I don't know who your father is, but I cannot answer your question, that particular question, Muhammad. But you keep asking, and I'll do the best I can to answer. So we're fighting, we're battling. The volume is tremendous, and it's battling it to go up, and it's falling. So we're going to wait around a little bit. We're going to keep it. If the volume was low, by the way, I'd be out of this trade. But the fact that there's so much volume and the selling is dominating the buying indicates to me that once we hit a level, it's going to pop. My feeling, I could be wrong. We're dancing. Oh, this is in the 1 minute chart. We're still dancing around that 2050 moving average. That's what the pink line and the blue line represent. Anybody making money out there? How are we doing? This is really an epic battle today. Volume is very much higher, way above average, and yet it ain't moving. So that really indicates a really epic battle between the Bulls and the Bears. Yeah, this indication is not the same as ours, of course. You have to take the quotes from your broker, and so I'm going to keep looking at our quote rather than trading views. I don't even know what this source is, but in quoting and trading and charting, you can use another charting program. At the end of the day, you have to take the prices offered by your broker. And so that's what we're going to look at, because that's what we're trading at this moment. We're not trading on a hypothetical chart. I don't know. I don't know how long I'm going to hold on to this position, because I enter these positions often without stops because it's too volatile and I can't really calculate them. And I generally take a smaller position than I have today. So we're going to wait it out. My feeling is that this is going to come back because it should. Again, that's not good trading reasoning, but that's what I think. That's what I believe at this moment, and we're going to see if I'm vindicated. I needed to get back to, when I get in on that, I need to get back to about 79.37. It's currently 79.33. So it's coming back. I think it's going to come back. I could be wrong. It won't be the first time or the last time. All right, here we go. It's pushing back. It's trying hard. It ain't going anywhere, but it's trying, that's for sure. It is trying. It's trying and actually succeeding. Like, as soon as I open my mouth, it contradicts me. That's I'm sure you're all familiar with that. Any more questions, ladies and gentlemen? Okay, price is recovering. Price is moving up. Well, I will stop saying that in order to prevent that from happening. Questions, ladies and gentlemen? We're now T plus 6 minutes and counting. Price is on the rise. The report was, just to recap, the report was significantly positive. Of that, there is no doubt. It came in 1.5 million less. 1.5 million less. That's indicated by the minus, and therefore the green imprint, meaning that it's positive for the dollar. Oh yes, interesting enough, they mentioned this as positive for the dollar, which is I only believe that they say that because that's the only thing they can represent is the national currency. They can't really say crude oil. So you wouldn't want to trade the dollar on that for certain. Questions, ladies and gentlemen? How long will you stay in the trade? What was the inventory? Here's the inventory. We came in, again, to recap, ladies and gentlemen, we expected a 900,000 barrel increase. We had a 1.5 million barrel decrease, and the price is still moving up. So that position is, how much is it moving up? From the time the price was released, it's now 70 cents above where it moved in. Yeah, and it's pushing up. It's still pushing up. There's a lot of movement here, and we expect it to continue. How long will you stay in the trade, asks Marius. Well, frankly, until I break even. I took 2 lots. I was a little greedy here, and I perhaps shouldn't have. No, it's still that my loss is increasing. So I don't know how long I'm going to stay in the trade. Probably hopefully long enough to break even. This is not working out for me particularly well, but I think that it will. And so Mohammed asks, is Iran sale on the black market? Is Iran selling on the black market? Yeah. Iran and Russia clear their oil on the black market in a complex system of lightering marine vessels in mid-ocean. They shut off their locators. They transfer illegal oil from. They transfer their oil to other ships that don't have their locators on, and they sail to ports that are forbidden for them to discharge. So yeah, they sell a lot of it to the black market. So does Russia, and it ends up in China and India. Those 2 countries buy regularly on the black market, and they're very happy about the sanction situation because it benefits their economies directly. I've answered that question for you, Muhammad. Okay, prices on the upswing. It's starting to pick up. I think I'm aiming for 79.80. I'm sorry, 79.70 is 79.68. Gets up there, I'm going to be out, Marius. That's sort of, I guess, the answer to your question. You know, a lot of times when you're trading a live event, you have to be patient. You just have to be patient. You know, you don't want to get out too early. In this case, I want to get out without a loss. Is what I'd like to do here. But if it reaches up beyond my break even is about 79.50, then I'll be in business. Let's take a look at how that position is doing. Okay. Not doing great guns, I'll tell you that. But I'll be patient because I think, and this is why I think this, here it goes, it's working against me again. It's hard to say. It's trading this narrow range and it's bouncing back and forth. If it stays up here and continues to go, I'll know I'm right. And if it dips below, probably around, 79.20, 79.25, I'm definitely going to get the hell out. Yeah, I'll be about $1,000 loss. It's enough for me. Mohammed asks, gasoline affected? Yeah, all of the distillates are effective. Reblended, oxygenated blend for RBOB, heating oil, naphtha, high density polyethylene, which is a raw material, a feedstock for plastic, all derived from oil. Yeah, there's lots and lots and lots and lots of products that are derived from cooking oil. Not cooking oil, that is the cooking crude, is what I meant to say. So yes, they're all affected, and almost a direct correlation. Did I answer your question, Muhammad? My volume is predominantly negative, but it is increasing. So here it comes back, it goes, it's trying really hard to battle back. To answer Marius's question again, how long will I hold on to this position? I'm inclined to say longer than I'd like to because I believe this trend is here. Let's take a look at the 30-minute trend. Okay, this trend is quite powerful. Even on the 4-hour, it's clearly up. Yeah, that one bar is in contradistinction to that trend. And here, of course, is the daily. It's up. Now we don't trade. We're not trading on this chart. We're trading on this chart, and therefore, what matters is to our position is this chart. And let me say, for those of you who are still as yet unaware of this, these buttons, depending on which system you're using, is the most powerful. Here we go. I think I'm going to get out. That's about it. I'm up to 1,000. I'm going to close right now. That's the maximum loss I wanted to take, and that's it. I'm out, and it should reverse immediately and prove me wrong again. But no, there it is. It stayed right there. It's not doing anything, and it's continuing to fall. And this, ladies and gentlemen, is one of the risks we face. It comes out in a way that's distinctly indicative of one direction and immediately proceeds to go in the other direction. For those of you who are not used to this phenomenon, ladies and gentlemen, welcome to capital markets trading. It's thrills and spills and exciting and fun, and you have to be prepared to be buffeted and not to let these positions stay in these positions too long because you think it's supposed to do this and yet it does this. This is what we care about, this is what we follow, and this is what we make sure we trade with. So, ladies and gentlemen, if there are no other questions, I am going to bring the session to a close. What is the difference between crude and Brent, asks Mohammed. The source. WT crude oil is also a blend. It's called the West Texas Intermediary Blend. And all oils are a cocktail from different wells. And that cocktail has to conform to certain chemical properties. And that is so for the refining process. In order to refine oil properly, you need to be able to cook it in a way that's suited to the actual oil itself. And the principal properties, by the way, are its sulfur content, which is referred to as sweet or sour, and its specific gravity, which is what chemists call its density. And There's light sweet, which is obviously a less dense, less sulfuric blend, and there's heavy sour, which is a obviously more dense, more disgusting sulfur imbued blend of oil. And it changes from different regions. There's the Ural blend, there's the Saudi blend, there's the Brent oil, which is a blend of about 5 different types of oil from the wells in the North Sea, and then there's West Texas Intermediary, which is a blend of crudes derived originally, anyway, from the Texas oil fields. So, ladies and gentlemen, I hope I've answered your question. Can you explain unemployment, inflation, interest rate, and GDP once again? Wow, Muhammad, you are really in full question mode. I will. Is food affected by oil prices? In the long run, yes. In fact, you will notice when consumer prices are reported, they're divided into 2 distinct groups, CPI and core CPI. Core CPI is the consumer price index without energy and food, because they're much more volatile and skew the inflation picture unnecessarily. So we cut food and oil out, and that is what brings us to the regular inflation. Unemployment rate, of course, unemployment simply means the amount of people working or not working. And gross domestic product is the sum of all goods and services sold in an economic zone in a year, or usually in a year, and often divided by the population. So the league tables of GDP are usually eliminated by GDP per capita, because, for example, the Chinese have an enormous GDP, by many measures bigger than the U.S., but per capita, no, not so wealthy. Whereas, you divide the GDP of per capita of Switzerland, per capita they're enormously wealthy, but it's a small country mostly relying on the banking industry. So, ladies and gentlemen, I'm going to bring the session to a close with T plus 17 minutes in, and oil prices declining for reasons not fully understood by me. But I hope you've learned something. And yes, Ramadan Kareem to everybody. Ramadan Kareem to all of our Muslim viewers. Let me say on behalf of the staff and the management here at Bankso, we are always humbled and gratified by your continued patronage of us as your online brokerage. And if you're just coming to attend the session and you're not in the house, consider opening an account with us. This is the kind of work we do for our people. It's quality work. We put a lot into it. Are we right all the time? No, we're not right all the time. We lose money all the time. But we make more money than we lose, and that, after all, is the sign of success in our business. The low bar, maybe, but this is a rough business. And if you don't have the guts to be, battered around a bit, this is definitely not for you. But if you can gird yourself for it, it's a fascinating, enjoyable, fun, exciting business to be in. And well, I hope I represent that to all of you. So, on behalf of the firm and its staff, I'm your host, Seth Julian, wishing you all, ladies and gentlemen, the ability to trade with confidence. Bye-bye for now.